So we have officially entered a bear market. So what does that mean? So you're officially in a bear market when stock prices drop at least 20%. But here's a really cool fact about bear markets. The average bear market is about 289 days, but the average bull market is well over 990 days. It's actually 991 days to be exact. Now, why is this incredibly reassuring? Because the average bear market is much shorter than the average bull market. What does that mean? That means that stocks go up more than they go down. Now, if you don't know what a bear market is, it means that when the market goes down, they call it a bear market, 20% or more, it's a bear market. And when the market is going up, it's called a bull market. That's why on Wall Street, there's the bull statue on Wall Street, because most people who are investing want the market to go up so that you can make more money. But here's the thing to understand about the bear market, is that it's a much shorter time frame historically than is what bull markets are. So this is something that's really reassuring because the market goes up more than it goes down. Now, we heard this in our episode with Brian Ferraldi, where he talked about this. He said the market goes up more than it goes down. And this just helps reassure that fact. Now, here's another really, really cool stat about bear markets, because stocks lose about 36% in bear markets, but they gain 114% in bull markets. Now, if this doesn't make you want to invest, I don't know what will. Because in bear markets, when the market goes down, it goes down about 36%. But when the market goes up, it goes up 114%. This is just another indicator that stocks go up more than they go down. So when a bear market comes around, it's a very normal event. This is going to happen very frequently in your life. In fact, over the course of a 50-year investment time horizon, you should expect to see about 14 bear markets within your investing career. This is something that is so incredibly normal, and you have to expect bear markets, and you have to anticipate bear markets. You have to know that they're coming, and you have to train your brain to understand when the market goes down, when the market takes a dip. I know that stocks are actually on sale. Good companies are on sale. And that's a time where I need to look at continuing my investment plan. And if I have extra cash, maybe I want to even invest that extra cash when I'm in a bear market, because you want to buy low and sell high. The problem is most people do the opposite. Warren Buffett said, "Be fearful when others are greedy, and greedy when others are fearful." So if you're going to be greedy when others are fearful, meaning you're taking advantage of when the market is in mass fear, when the stock market is going down. Now, this is easier said than done. I'm saying this like it's an easy thing to do. It's not, because your emotions get involved when you start investing. But if you can learn to train your brain to do this, that when bear markets are in play, we know the stats here. Bear markets go down on average 36%, and bull markets go up 114%. That's a winning formula for you. That's a winning formula for me. That's a winning formula for anybody who's looking to build generational wealth and create wealth for their family. So this is something that is going to change your life if you can get this down and you can understand this. Now, here's another incredible stat. This is one where you need to keep your dollars invested if you're investing during a bear market. A lot of people get scared. They want to pull their money out when a bear market comes along. Here's why you don't want to do that. Because in the last 20 years, the S&P 500 has had its best performance 50% of the time in bear markets. If the S&P 500 strongest days are 50% of the time in a bear market, and you don't have your dollars invested during that time, you're going to be missing out on a lot of gains. When we talk about those 10% rate of return, you have to keep your dollars invested to get that 10% rate of return. Otherwise, you're not going to get that rate of return. If you get scared and you pull your money out, or you let your emotions get involved, you're not going to get that 10% rate of return. You're going to get a very different return. It's going to absolutely change the trajectory of your wealth building formula if you do it that way. But if you just train your brain to keep your dollars invested within a bear market and know, hey, there's good things coming along the way. Historically, it has shown that good things are coming. Now, a lot of things change all the time. Obviously, history can't indicate the future, but since 1928, these are the stats that have happened. Almost 100 years of historical data is what we have on this stuff. Now, here's another really cool stat, that bear markets do not automatically indicate a recession. Since 1928, 14 bear markets happened right before a recession happened. Okay, so that may be somewhat of an indicator that the recession is coming, but 11 bear markets happened and no recession happened whatsoever. There was just a slight pullback and then we were back in business again. So a bear market does not indicate that a recession is coming. So we have a bear market right now. It does not indicate that a recession is coming. We had one in 2020 during COVID. It does not indicate that a recession is coming. Now, what was the worst bear market of all time? The worst bear market of all time was in 1929, is when the Great Depression started, where the S&P 500 lost 80 86% during that time. Now listen, and I know this is something that doesn't sound good to lose 86% of your money, but guess what? It didn't go to zero, and look where the market is now. So even in the worst of times, keeping your money invested over time is something that can really benefit you when you look at the historical data. Now listen, these stats should be giving you peace of mind. They should be helping you understand that bear markets are a very normal thing. And if you're an investor, if you're a long-term investor and you're going to invest your money 50 years or longer, you're going to expect to see bear markets. Specifically, historically, we've seen 14 of them, like we said. So you need to expect to see these bear markets coming up as an investor. And you need to make sure that you're not reacting to bear markets, that you're continuing to invest, you're sticking to your investment plan, and you're making sure that you are brick by brick building wealth for yourself, your family, and whoever else that you do this for. So listen, I hope this is reassuring for you because a lot of people are messaging me saying, should I stop investing? Should I not invest my money anymore? You absolutely should continue your investing plan so that you can create financial independence for yourself because nobody has a crystal ball. Nobody knows when a recession is coming. You don't know when a recession's coming. I don't know when a recession's coming. No financial guru knows when a recession's coming. So the only thing that you can do is focus on the things that you can control and continue your investing plan over time. This is the most important thing that you can do with your money is to stay focused, stay grounded, and make sure you just continuously put that money into your investment plan. So if you're investing in index funds, you're just continuously putting $500, $600, $1,000 a month into your index funds, and you don't stop your plan just because there's economic indicators that indicate, oh, maybe a recession is coming. Maybe it is, maybe it isn't. But I don't know that, you don't know that, and anybody who tells you they know that, write them off immediately because guess what? Nobody knows that answer. So keep investing, keep doing your thing, don't panic. Don't worry about what's happening right now. We're in a bear market. So what? And because you guys are wealth creators, because you're people who want to build wealth, you know that keeping your dollars invested is the best thing for your financial freedom. Thank you guys so much for watching this money Q&A video. If you guys have any questions or want to leave a question with me, hit me up on Instagram or TikTok at Master Money Co. And if you like this video, here's another Q&A video that I know you're going to love.